Basically, this is NZD USD trade that we took, and I'm about to break it down and the thing that I saw and how you can actually use this to add to your trade. Now, looking at this chart, we can see that we have bullish uptrend in this 15 minutes time frame. I can go to a 1 hour time frame, but this is the time frame at which I saw it, and this is the time frame I took every of my trade. All right. I took this specific trade, not every other of my trade though. So we have I need to see what my bias is as opposed to the overall trend, what my AOI is, which is in turn going to affect the invalidation point. Now the invalidation point is not the point at which my stop loss is, it is the point at which my setup gets invalidated. I can have a buy and it fails and I rebuy again just in case I didn't wait for setup for my negotiation, right? And then the entry, exit, then the risk appetite. Now you can see how I wrote negotiation here. It means that once market is coming to my I wait for something we call confirmation. So I call it negotiation because that is what is happening right here, the auctioning of prices around that area, right? So we can see how market build up these lows and market took it out here, and that is another reaccumulation. Even how when market was coming back into the area of interest, which was already a reaccumulation space, right? And so we have an impulsive move, which is the motive of the price, and then we had market got back into that area, which if you draw your Fibonacci ratio, you can see that it is confluencing with below 50%, and in this case it is at exactly 70% of my Fibonacci settings, right? Now when market go back there, that is not all. You need to wait for additional confirmation. Now my own additional confirmation right here is that this accumulation has to occur like this, right? So you wait for an accumulation of pricing here, then market invalidated it. Then we got back into that range, and that was my entry. My stop loss was just right below this one. Now, let's assume this fails. I could just wait for, because this could literally just be another setup that's going to fail for the final spring, of course. So now this becomes my invalidation zone, and that is what I'm trying to point out right now. Invalidation. Now this becomes my validation zone right here. This means that even if this setup should fail and market comes back into this low, I'm going to still look for my buys. I will look for this same setup right here because market is still within my validation zone, right? And so that was what happened at market go. So let's talk about the take profit. Now, I know that we are actually after the risk to reward, it has to be 1 to 3, but there's something that is happening on chart most of the time. You see, this high right here is the first take profit you would ever be certain of. All right, because market is moving high. After market takes external, market pulls back, takes external, pulls back. What if market takes this one, pulls back here to mitigate this one and go again? So you're going to be in that chart, right? And I've seen myself done that before. All right, so this is what happened, and this was how market went and blew up. I'm going to talk about the how to exit on the next video, so just enjoy this one.